Hey guys, it's Isaac with Man Mortgage. I wanted to make a video really quick kind of telling you the differences between a conventional and an FHA loan. One of the hardest parts that people have with the mortgage process is knowing what type of loan is going to be better for them. Obviously, that's why we're here, is to help you make that decision, but it's still good for you to kind of know the differences between the two. So I'll start with conventional. Conventional loans, they're standard. They're probably the most popular type of loan. The great thing about conventional loans is if you're putting 20% down, you won't have to pay mortgage insurance. Now, the fact of the matter is most people don't have 20% available to buy a house, but the minimum down payment on a conventional loan is 5%. And occasionally we, depending on your situation, we might be able to get you approved for a program that is actually only 3% down. If you're putting less than 20% down, chances are you're going to be paying mortgage insurance. But the really cool thing about conventional loans is after you've been in the house for a while, let's say the housing market goes up, and then just after making your payments for a few years, you're going to build equity in your property. And once you have 20% equity, you're able to remove that mortgage insurance and possibly lower your monthly payment. Conventional loans generally require a little bit of a higher of a credit score than FHA, and definitely the higher credit score you have with conventional, the better rate you'll get with a conventional loan. FHA, on the other hand, it's not as important to have a really high credit score. In fact, if your credit score is, FHA is more common for people to use that maybe their credit isn't quite as good as they'd like. So FHA loans, they accept lower credit scores. They're easier to get qualified for. And then the other big thing is with FHA, you can have a higher debt to income ratio. So let's say you have a house that you just really love, but your conventional debt to income limits are a little lower than that with FHA. So if you can't qualify for this dream house with conventional, it might be an option to go to FHA. FHA is a minimum of 3.5% down. And it's a government-backed loan. It's a very popular loan, and there's absolutely nothing wrong with doing an FHA loan. Kind of just depends on how much money you're wanting to put down and what your goals are. But that's what we can help you determine, is what loan program would be best for you. So if you have any questions, feel free to contact me or anyone here at Man Mortgage, and we'd love to tell you more about them.